All right, good morning. It's Tuesday, April 28th, and I actually made a little video, and volume wasn't turned on, so I had about 5 minutes of unfortunate waste there. But what I really wanted to do is get on here and just give a little general introduction for people that haven't, let's say, ever done any trading or are looking to invest for their first time when the markets are pulled back right now. Or maybe they just started their own trading account and they're looking for some general wisdom about where to look, what to do, and that sort of categories. What I'm going to do is pull up TradingView, and this is the main app that I use. So it's just a free Google. Google it up. You can get on here. I mean, you can create a free account, and then you can do all your own little technical analysis. What I can say is that I started doing, let's say, technical analysis and looking at investing probably about 2017, so it's been about 3 years of playing around, getting to know stuff, and in some sense, that's what it takes. I mean, trading is just like learning Spanish or learning math. It's a whole different. It's a new system, and when you're completely new to the system, it's tough to know anything. So with this, you can look up almost anything, or you can just click something like, let's say, oil, and then it'll pull up a general summary, kind of like what your bank will look like, and then you can see different ideas from different traders, and then you can see, oh, this guy's paying $50 a month to trade. So you can get a little bit of a diversity of opinions, and usually most people with their finances, they don't take it upon themselves to invest their own money and to be responsible for their own financial futures. What they usually do is hire a financial planner or a financial advisor to advise them on what to do with their money. So it's not a bad thing to have, someone advise you, but it's just a matter of, do they have your best interest in mind? And one of the things that when you invest, a lot of times when you're listening to other people, you have to realize that there's kind of a term that there's lots of terms that you're gonna come across that you haven't heard, but shilling, and it's just like, what is shilling? I mean, well, not that shilling, not this kind of coin shilling, but it's to say that like you're going to be basically pumping your own tires. So if I owned a lot of silver and I said, hey, you should buy silver, that's kind of shilling silver. It'd be more shilling if I had percent ownership in silver. If I own 80% of the world's silver, you'd be a lot more suspicious about my message. So when an oil guy starts telling you to buy oil, you should have some salt on that advice, because you can't take anyone that has financial incentive at prima facie value. I think that's the point I'm trying to make. So you want to never listen to any one person when they're giving you advice. And for me, I'm never giving advice because I'm not a financial advisor. It's illegal to give financial advice. So the way I do it and the way that I went about investing for myself is to try to accumulate as many diverse opinions about the market and try to catalog and categorize information so that you can start having some type of awareness in the system that you are. So it's good to have, it's good to listen to counter opinions. So let's say that hypothetically you were bullish on oil, and you were convinced that oil is going to have a good rebound and we're going to see a good recovery in oil, and no one's going to convince you otherwise. I think it's important to go and listen to someone that's got the counter opinion, because the truth's always in the middle, and a lot of times you get the two extremes of polarity, the positive and the negative, and the more you gravitate to one side, the more you kind of lose perspective of how it is on the other side of the hill. So I think it's important to listen to a lot of people with counter opinions, and for you to make your own decisions yourself. One of the worst things with trading is just to go off the opinion of someone else, because let's say hypothetically the price starts moving in the opposite direction. You won't have any confidence or solidity to stay steadfast in that investment, and likely you'll sell it out of fear, and typically you'll do the exact opposite of what you should do, and that's buy low, sell high, not buy high and sell low. So if you bought oil right here off of someone else's recommendation and you started to see it go down, likely you would have sold at some point, and maybe in this case Maybe that was not the worst case scenario, but either way, you don't want to invest on someone else's opinion. You want to make that decision yourself. Now, what decision, what information do you want to make those kind of rational decisions? Well, it should be predicated on multiple things. I mean, if you're just like, I like this, I'm going to buy that, you're basically just gambling with your money. So when you start compiling, points about the rational reasons that you should be investing into something, now you're starting to come up with a plan, and that's how you should do it. You should have a couple of things prioritized. So I'm just going to go back on some of this stuff here, and I'm just going to go to gold here, just because I was going to delete some of this stuff because it is pretty messy. But when we're looking at it, these are just indicators down here, and these indicators can serve purpose or not. A lot of times people say, hey, if you got a bunch of lines on your chart, you're just complicating things. And a lot of good traders, they just look at the bar formation and they don't draw a bunch of lines. But in general, when you're investing in stocks, you always want to look from a large, big perspective, so a monthly time frame, and then you can zoom in on a weekly time frame and a daily time frame and get a little bit better. You get a little bit better situated to where you actually are. So I usually never recommend anyone get involved with anything that doesn't have a positively trending curve. So that's the good thing about, let's say, TradingView. You can get any asset and say, hey, is this price moving up over time? And that should be the only thing you should really be worried about. You can look at something like TD Bank. Is it moving up over time? I have a parallel channel here, but we could say yes, it's moving up over time. What else can we say here? Tesla, are we moving up? Yes, we're moving up over time. Now we could pull something else, like let's say we just pull up this oil chart. Now I don't know if this is the right oil one, but I think you can get the point. Like we're not positively trending here. Now, could you get a huge bounce off this negative trend? Yeah, but when we're talking about just holding it for the long term, you don't want to be holding assets that are going that way. That's not the point of investing. We want our money to grow, or we want the value of our money to be retained over time. So step one, a good general thing is, if you want to, let's say, if you think that, okay, I like whatever, I like Facebook. I think Facebook is going to be here 5-10 years. I think that they're going to sign a bunch of deals with the government, and we're going to have Facebook, holding hands with the government, surveilling everything we do, tracking, doing the data surveillance. I think that's going to be good for Facebook's overall well-being. I mean, those are the kind of macro ideas that you want to apply to like good fundamentals. So I mean, you could say, yeah, Facebook is going up overall. And that we can look at other things here soon, but Amazon is going up, overall. So you could say these are not idiotic bets. Now, there's always more that goes into this, of course, right? And it's a full language. It's not this simple. But in general, that's probably the first thing that I would recommend to anyone. Never get involved in an asset that's trending negative on a monthly time frame, especially if you're new. Especially if you're new, okay? It always matters on the time frame that you're looking at. When you look at a week time frame, you could look here and be like, oh, well, this is going down. It's negative. Well, that's why it's so important to look at the bigger one before you actually start looking up in more specific time frames. So another thing that I usually like to go over is this understanding that markets run in cycles. So if you can get a positive trending asset like gold, silver, what have you, and you know that it typically runs in cycles, you can really start making some a little bit more educated decisions. So this is just that's not a very good one. This is the one I usually go off of. How we usually have a good rise in price. So we designate this as the bull market, and then this would be the bear market. And here we have a more of another diagram here, kind of showing this phase, and we have a period of contraction followed by a period of expansion, and I usually say a cup right here. So when we have an overall positive asset, it still will go through these correction phases, and then it'll reach the new level of prosperity. So this is a huge thing, because most people that trade realize that you're not really trading price, you're trading human emotion. So that's really all it is. I mean, in life it is just that kind of weird that the real currency is emotion. I mean, the real reward is emotional gratitude, and that's where, I mean, you can see why fear is the currency that they're printing right now. But when we get into this stuff, I mean, you go through this whole phase. I mean, you have immense feelings of euphoria and think that, oh, I'm so smart investing in this, and then eventually it ends up falling off, and if you didn't sell, then you can hold this stuff for all the way up and all the way down, which doesn't really, it's not the best feeling, but there's plenty of different things. Here's another one. You want to invest where it's not quite risen up, so you say that's smart money. Institutional investors, it starts coming up, has a little dip, liquidates a bunch of people, and then this is when you hear about stuff. This is when I was exposed to Bitcoin in 2017. This is when the majority of the public goes in. So during these bigger phases, this is probably when we start reaching into the new phase of prosperity. Like right in here, we start reaching up into that when the public gets aware, but all the smart money already got in here, and they're making exponential gains on that. So just to quickly pull up that, and you can start seeing, like right here, we're obviously in that same kind of cycle right now, and we just had a period of contraction so that we can expand right here. And when you pull out the price, that's more or less what happened right here. And you could start forming little versions of itself within itself. So I don't want to go over too much in the first time, but yeah, that's typically what people say, and a lot of times they say, hey, it's forming a cup and handle, and I can get into that more so, but I think in general, just even knowing those few kind of things, positively trending ones, things run in cycles, and typically, just really quick, one more is this, really have a 1, 2, 3, 4, 5 up in a bull market, which that was clearly a bull market, and then we have a corrective, let's say ABC pattern, or maybe that was, let's just say that. And then if we're going to continue on in a bull market, we're going to start forming some of the same type of structure. Now, that's not what I would say the count is here for gold, but that's Elliot wave theory, and it just goes off of that. So there's a skeleton to these charts. They work in waves, and it's called Elliot wave theory. I got a bunch of different diagrams here. Maybe we'll just pull up a couple. So yeah, you can usually see it works in 5-wave patterns, and it corrects with an ABC. So that's something that you can start saying, learning your ABCs. You could say there's some of that to be had. But there's a lot of different ways that people trade. I mean, sometimes people use purely just what these bars are saying, and each bar could tell a story. The green bars represent a positive increase, obviously, and the red bars indicate a negative one. So this green bar here started here and ended here, but it also had price movement that reached these levels and also right here. And this is in regard to a week time frame. So each one of these could be saying something in itself. This one here, we started up top, we ended right here, but we also went all the way down here and we came back up. So since we pushed all the way back down and the price got bought back all the way up to here, you could look at that and say, hey, there's a kind of it's kind of suggesting something. So there's information to be had everywhere, and a lot of times people are just using sometimes short-term support and resistance, and vice versa. But for me, like some of the big things that I'm using to determine, let's say, when to get involved in something. I mean, we can just say there's some fundamental things. Man, I don't know if I can type anymore or what the hell is going on, but so I got positively trending chart. Came up with rationale personally. The macroeconomic support idea. See, I can't spell. Optimistic. Fuck. So we could say, in general, a positively trending chart. You came up with the rationale personally. Macroeconomics support the idea. The technicals look good. So there's a really quick, brief, let's say, checklist to say, hey, do I want to invest in, let's say, gold, hypothetically here? So we could look at this and say, okay, we have a positive trending chart. Yep. Came up with the rationale personally. Well, no one whispered in my sleep, buy gold, you know? So, more so the news is probably giving you some subconscious suggestions, so never mind with that, what I just said. Macroeconomic support idea. So, on this channel, I've done a lot of content pertaining to gold and hyperinflation. So I'm going to link that video in here just to go through my macroeconomic idea, why it should be good. And historically, that's why. I mean, there's no case in history that is saying that it shouldn't work out the way we're saying. Plus, we're coupling it with, you know, a bear market cycle here. We're almost reaching the next pinnacle here. So we have a positive trending chart. Good. We have every rationale. I mean, gold has never went down over any time period without recovering for tens of thousands of years. Macroeconomic support idea. When do people buy gold and silver? In times of economic uncertainty. What do we have right now? Nothing but economic uncertainty. Another checklist. Technicals look good. Like I said, we're right in this cup formation. So when we looked at some of those things, I mean, you could say smart money, institutional investing, like we're just about to hit the public phase right now, or whenever we do hit above 1900, which could be a lot longer. I mean, who knows? You can never predict, right? So we could see price action come back down here, but I'm pretty sure we're gonna be doing something like so. So in my mind, I think it's pretty important to be allocated at least partially in precious metals because of the macroeconomics of our world right now. So with all this uncertainty, I think it's more or less just your insurance to make sure that you don't end up with nothing, and that's just preparing for the worst and hoping for the best. Now, in terms of besides, I mean, I think it's pretty clear my personal viewpoints on where should you be putting your money right now. Like for me, I got silver ETF, gold and silver ETF. I mean, the Bitcoin, Ethereum, this is definitely a riskier, you know, thing. When I say it's risky, there's huge risk here, but there's huge reward. So if you're looking for risk, I think you should allocate it in these ones right here. There's a lot of macroeconomic reasons that I think personally that these could be doing very well. So come up with your own rationale, right? They have positively trending charts. They're going over, they're freaking the hell out. The technicals look good. But yeah, each person to their own. Gold and silver, personal. this is probably where I would suggest to put your money right now. And I mean, if you can't buy it in a physical bastion, I would take a look at PSLV, CEF, and also Sprott. I've looked at this one in hindsight, and I don't like the custodian, so I'm going to just delete it right off. And what are some potential other forms of investment? Well, real estate is always typically looked at a good investment, but I would say right now we're in a bubble. So real estate could be seeing some big losses. Now, am I saying sell your real estate right now for a loss? I mean, it depends on how much you got. Like, does it have like some residual income? I mean, it will rise from the ashes again. So if you can just hold on to it and your wealth's okay, maybe it's going to be fine, right? But let's say that we do have a pop of the real estate bubble. It's a good way to transfer your gold and silver into assets like real estate and then ride this up again. So that's what I'm planning on doing. Holding assets like gold, silver, Bitcoin, Ethereum, gold and silver ETFs, waiting for these gold and silver prices to start going up over the next 1 to 3 years, and I expect easily 2-3 times their value. And then I'm going to reallocate this money into property, because by that point, people that aren't working and the government is not going to be able to pay our money forever, property is probably going to end up having to take a hit. Maybe it's going to be huge percentages in some countries, maybe more minimal in others, but I'm expecting a discount in real estate since, well, more people are going to have to sell their houses because they're not working. People have been laid off, and that's going to put more houses on the market, which is going to increase the supply, which is then just going to work with that, that's just economics. Increase the supply, price will go down, especially when no one's making any money and real estate's pumped so high that we can't afford it. So it's not as bad as other countries like Australia, but I would say I wouldn't put my money right there, but in the future, yes, that's a really good potential. Collectibles, antiques, I don't think that this is a bad place if you wanted to have some diversity. It's just a matter of who's going to have money to buy these antiques. So if you're buying the Mona Lisa for $20 billion, I mean, who's going to buy that shit from you? Now, if you have collectibles that are resellable and actually have use, maybe there's some legitimacy to this. So maybe there's not the worst thing to have an old Mustang in the garage, or maybe if you collect guns or coins, I mean, maybe something that's actually transmissible easily, and there's actually liquidity in that market. You don't want to have antiques that no one wants and you can't resell. Again, that's a little bit more work for me. Now, I mean, it's probably never a bad investment to have self-sufficient means of air, food, and water. So if you had a farm that you could, produce your own food and water, I mean, that's wealth in itself, right? I mean, that's all you really need. And you could always exchange those services in the worst of time for things like gold and silver or Bitcoin and Ethereum. And then lastly, things like businesses. So yes, when we have this economic downturn, it's going to drive a lot of people out of business, which will eventually lead for opportunity. So businesses will be turning around at some point. It's just a matter of when. And that's just like, well, when is the S&P 500 going to start turning around? When is the Dow Jones Industrial going to start finding its bottom and market confidence is going to come back? That's just where I don't know, man. I don't know, because I hear all these different opinions. Like I first said, you want to listen to two different sides of the spectrum now. We have some people on the one far side of the spectrum saying that this is going to be the worst depression that we've ever seen as a globe, likening to the 1930 Great Depression. And it's not crazy for people to be saying stuff like that. So you have to be worried and concerned about that plausibility. And that's maybe why I'm allocated strongly in positions with gold and silver, because that is your ultimate insurance for, let's say, the worst case scenario, where inflation hits us all, a wave of starvation and poverty hits the world, as no one's producing, no one's consuming any oil, and the system we've created is, predicated on those things. So consumerism, right? When we stop consuming, demand goes down and no one starts producing, and then we kill the supply chain, and there's potential negatives to that. Now, on the other side of the spectrum, there's people saying that, hey, we might get just a huge bounce. So I'm just going to go to the Dow here. We're just going to see a huge bounce. Just like, let's say, in 2008, 2009, we're just going to see, like we've seen right here. We're going to have a huge downturn, and within, let's say, '07 right here, we're back. Well, that's still 6 years it took us to recover, but that's a V bounce right there. So yeah, when you look at that, I mean, that's what you could be hoping for, right? But when we look at it in a monthly spectrum here, like this was the Great Depression right there, and this stuff does happen. I mean, we've seen a horrible decline in that over the course of this isn't going to be right, so let me just a loss of 90% of the market, so that's quite significant. You don't really want to be losing 90% of your $100 and being like, oh well, my $10 will be $100 in how long? 9,300 days from 1930 to 1955. So if that's the case, you can see where it's a little bit scary when we might be at some of these levels. We might just be getting started in this whole recovery process now. Who knows how far this is going to dip, and nobody knows, right? Nobody knows, but we could see it. We could see the Dow Jones dip to 1,800. We could see it dip to 1,400. Hell, you never really know how far this could hypothetically go down. If we wanted to make comparisons, we could see it if it had another gross downturn. Yeah, that's 85% of its value back to about 4,500. I mean, it wouldn't be absolutely impossible for something like that to transpire. So it's not like I'm suggesting that that's the case, but the macroeconomics are not necessarily, they're not positive, man. I mean, to have the world economy shut down, to have oil go down to non-competable levels, I mean, to have literal, social distancing being reinforced. I mean, I go to the grocery store, there's 20 people at the grocery store just mitigating where you stand, and there's 3 people fucking working there. The life as we know it is changing. I mean, my livelihood is my career is definitely not looking what I want it to be. I'm seriously contemplating, other means of livelihood. Now, back to the point here, just on how we invest. I mean, we have to look at these broader factors when we're thinking about what should we do, what's the future hold in store. I mean, we're more or less trying to predict the future here. And here's some general things. Let's just look at the Sprott Physical Silver Trust here, because look at, I'm almost falling against my own recommendation here, because this is kind of negative when it looks like that. On the plus side, we are following a positive thing, and I just know Sprott, or it's a physical silver backed one, so this one's a little bit less real because we don't have this information from back here. It would look to be negative, but it isn't. So this one's kind of looking dirty because too many lines on here, but you could say that physical is overall upward swinging asset, and we are kind of, well, it would have been nicer if we didn't have that little dip here, but it's the pandemic, it got bought back up again, so we could say that we're forming a pretty good floor right here, and that looks like a good time to start allocating smart money into silver right now. So for me, where am I putting any of my assets right now? It's silver. I just bought some gold, and I'm just gonna play a little thing from a guy I watched, because hey, I'm sitting here telling you to look at all these opinions. This guy is gonna be a far side positive gold and silver guy, but hey, why not listen to one perspective and go and listen to the person saying, hey, it's all dinosaur money, you're not going to be able to use gold and silver, how you gonna buy this or that online with it, blah blah blah, right? So let me just see here what I'm gonna look at. Let's just do this one first.
The analogy I can think of is when you borrow, you're going out into the future, digging a hole, and bringing back the dirt so you can stand atop a higher mound today. Since we continuously move forward in time, tomorrow we must go even further out into the future, dig up enough dirt to fill the hole that is in front of us so that we don't fall in, and then we always bring back a little extra dirt so we can stand on yet a higher mound. And here's some renderings I had made of the process, and you can imagine like a 30-year treasury bond, a 20-year, a 10-year, a 5, and so on, down to a 30-day treasury bond. We're borrowing out of the future at different paces. And when we move forward into the future, so this is a 30-year, but this 20-year was also last decade's 30-year. So we're digging that deeper. It's the 20 plus the 30, and the 20 plus the 30 plus the 10, and so on. So we dig this pit, and then we've got to fill in this before we can move, time. We can't stop time's forward march. We're always moving forward. And so we've got to fill in this pit before the time elapses, but, inevitably something will happen. So we keep on filling in that pit, but then tomorrow when we move atop this mound, we've got to go and we've got to dig this 30-year treasury bond, the 10-year, the 20-year, the 10-year, and so on and so forth. And if this is an individual, you can imagine this as your home loan that goes out 30 years, and then your car payments that go out 5 years, and then you've got credit cards and other debt that's short-term debt. So it's the same scenario, whether it's an individual or whether it's a government borrowing us all into a hole.
So this was just a quick little video about, every time they print money to save our asses right now, it's digging a bigger hole for us in the future. So this is kind of increasingly the scenario that's obvious to me, and for individuals too. Like you just said, when people start getting in severe amounts of debt, it's a never-ending cycle. It's a vicious cycle, and you keep on having to borrow more to for today, and just kind of guaranteeing your future problems. This is over the Australian real estate bubble. It's just kind of crazy how much they've went up. But with this one, I think it was just kind of a good little analysis about how when we keep on printing money, that's what we're doing. We're borrowing it from the future. We borrow it for the future for today, which only guarantees us a bigger hole that we're going to have to fill up in the future. So, excuse me. Oh, call the hospital and send me to quarantine. Choking them. But every time we borrow money, or every time that we print money to bail out businesses, every time we print money as a country to pay people that aren't working, we're digging our own grave. You can watch this if you want. I mean, it's pretty good. Just to go to the next one here, and this was more just about gold to silver. And we'll just play this right now because this was something that I was kind of unaware of.
Help us in the YouTube algorithms getting recommended. The chart of the day. This is the gold-silver ratio, and whenever it reverses, silver outruns gold. And whenever this is falling, silver is outperforming gold. It takes fewer and fewer ounces of silver to equal the value of an ounce of gold when silver is rising faster than gold. So this ratio falls. Whenever it's climbing, gold is outperforming silver, and it requires more and more ounces of silver to equal the value of an ounce of gold. So back in the 90s here, gold fell 21%, silver rose 42% when that reversed. When this bull market started back in the 2000s, when silver, it started back here, but silver, actually this was the real low in gold happened in late 1999, and gold outperformed silver, and then in 2001 gold made its double bottom, $3 higher than this bottom, and then gold was outperforming silver because silver was just moving sideways. But then when silver started to perform, it performed with a vengeance, Gold went up 169% during this period, but silver 330%. Then you had the crisis of '08, and gold outperformed silver. But then once the crisis was over with and things started recovering, silver outperformed gold by, gold rose 77%, silver 350% during this time period. Now this ratio can also help you from buying precious metals. See, I've been buying since October of 2002 for gold and April of 2003 for silver. And so, but following this ratio keeps you buying one or the other, keeps you from buying one or the other when they're overvalued. And so, like for instance, I usually buy a mixture of gold and silver when it's 55 to 70, and then I buy only silver when it's over 70, and I bought only gold when this was under 45. I didn't buy any silver, and it prevented me from buying silver that was up at $40, $45, really what was expensive silver for the time. Now, we are up at 113 ounces of silver to equal 1 ounce of gold, and there is no time in human history that this has ever happened. Silver has never been, all of history, since the beginning of man, silver has never been this undervalued compared to gold. And this will revert one day. The big reversion is going to come when there's monetary demand. Because people will say, oh, well, silver's an industrial metal mostly, and so as industrial production slows down, we won't need as much silver, so demand will fall. But silver isn't just an industrial metal. It's an industrial metal and it's money. The industrial metal portion means that we use up most of the production. It also means that the vast majority of silver supply comes as a byproduct from mining copper, lead, and zinc. And so as those go away, the supply goes away just when monetary demand picks up. And that monetary demand is going to pick up when gold passes $2,500 or maybe $5,000 an ounce, and people look at silver and they go, wow, this is undervalued.
So I thought that was pretty good information. As I just bought some gold, either way, I don't think either one's going to be a bad investment, but I think just your best bang for your buck here. And you can see here, you're more or less buying silver in this bottom crevice right now. And whenever we go through a cup or a period of contraction, just to get ourselves ready for some expansion, that's what I'm seeing right here. You're seeing this downturn, and we're going to have a little bit of flattening, which we've had, right? This top right here is all the way from 2011, so we've almost had 10 years of gaining steam, getting ready for the next push, you could say. So in my mind, most of my new money coming in is going to be in this probably in silver, if not partially into cryptocurrencies. But that's my own forte, and I wouldn't recommend getting involved without doing a lot of your own personal research. Now, are we going to see something like that? This could be drawn out for a while. Is this going to start shooting up a lot sooner? No one can predict this future, but I think no one's going to say that silver is a bad long-term investment for all those different reasons. It's money, it's currency, it's going up, it's needed for a lot of different things, and the charts look good, the macroeconomics look good, it's undervalued, it's fair valued. In relationship to gold, it's never been this cheap. Just think, it's $15 an ounce. This guy, it was $45 an ounce 10 years ago, so this is the kind of stuff that I would recommend you to put your money in. Now, there's always, when you get into gold or in silver, you can get gold ETFs and silver ETFs. You can get gold future contracts. You can get streaming companies. You can get mining companies, or you can get the physical stuff. And even within that larger pattern, you should have diversity, I would say. But going back to that kind of analogy of far spectrums, you can have opinions within, like, let's say we agree on investing in gold and silver is a good idea. Now we can have disagreement on which aspects of the gold and silver market, what is the best and most profitable. Now, I mean, one of my buddies likes to say mining. He likes to say mining. These mining companies are going to do. He's just, convinced about mining. I mean, I'm open to it. I'm open to looking at that. But historically, I've looked at some stuff and it says just buying the plain old physical stuff is your best bastion, because every time you buy an ETF, you're hoping that the custodian's holding him and you're trusting them. And that's one thing you shouldn't have too much of, is trust with your money. It's emotion and trust. You don't give that away, because, I mean, everyone's trying to play on your emotions to get your money, basically. It's just sad, but in the shield of virtue, they're going to come take your money or your freedom, whatever it is, first. So hearing that, I mean, you got to be open to a lot of different opinions. I mean, and having that openness and criticalness will expose you to some of these potential trading opportunities. Now, I mean, there's always so much to look at, right? I mean, you could look at things like, what's the VIX volatility index? Like, how crazy is it right now? How much volatility are we having? I mean, during this, we shot up to crazy levels back to where the housing market crashed. So there's definitely fear in the market. I mean, now, are we done? Are we done this? Are we going to keep going? I mean, that's just the different things that you can't never be certain about. So for me, I think my points are, this is definitely way longer of a video, so I'm sorry, but hopefully you get a little bit of an exposure to, let's say, investing, or what you should start thinking about when you invest. I'd say start following some different people, follow some people on extreme ends of the spectrum, and you got to start learning. And now is the time, more important than ever, to protect your wealth, because no one else cares about it unless you pay them to, and you pay them a percentage. I mean, when you incentivize someone that, hey, every dollar I make, you make 25 cents of it, then you can see people maybe aligning under your cause. But a lot of times, I mean, there's no consequence if you invested in the bank and they lose it. It's just like, oh, it's gone, sorry. It's not that bad, but I think you could see what I'm saying. So with this, I mean, mostly I'm invested into those companies. I mean, looking at some of the bigger tech ones that you might be okay with, I mean, Amazon is, pretty good. I mean, but when we look at this, I mean, just in terms of potential, like this was the cup. This was the cup in Amazon. That was the time to get in right here, the smart money. Right here, I mean, we could just keep on going up for who knows how long, but eventually the only thing certain is that we're going to form another one of these cups. Maybe it's not going to be that deep. Maybe it'll be like this, but that's just a certain one, that's how it works. That's the only thing you can be guaranteed of, is that markets run in cycles, and the more you start looking at this, you're going to start realizing it. And you can see, you could look at something just like Bitcoin. You can see a big cup right here. We went up all the way up here, and what are we doing? We're forming another cup. Now this could be that was definitely a liquidation on an exchange or something. But how long is that going to happen, right? This could drag out for another couple of years before we see that next rise, right? So if you're putting your rent money in here, I mean, you don't know what the hell Bitcoin is, don't do that shit. But you want to find things that are going up, that are in the good market cycle, because you understand that markets are just emotions. And then we can start looking at, secondary indicators and say, hey, right here, it looks like that's kind of an end to the negative downturn. Or, you can look at these secondary indicators for a little bit more guidance. So as of right now, I mean, on my channel here, I don't have like it structured very well, but looking at the history of hyperinflation, and then if you want to look at any one of these stocks individually, you can take a look and see what I said. I've looked at all different, whatever one you want me to. So some of the specifics, the gold ETF stuff, I mean, take a look at that. But besides that, I'm going to call this one a day, and I'm going to get onto it. So hopefully give you a little bit of an idea if you're brand new and you don't know what to do at this point. I mean, start learning as much as you can. Start thinking like what makes sense to you, what's going to be profitable for you in the future. I mean, it's just a matter of which way the future is going to go, and I don't think anything's for certain right now, but I've basically allocated my wealth for the worst case scenario, and that's in precious metals and stuff like cryptocurrency. I mean, now I almost hope that doesn't go up and we have just a resurgence in the stock market. I mean, I'd much rather have life go back to how it was than that. But that's just where, I mean, for me, I wait for better opportunities. And I mean, I've looked at the 5G companies. I'm watching different stocks in that aspect. But in terms of just like safe, like conscious wise, like safe investments that you don't have to think about every day, gold and silver, and I would say probably silver over gold right now. You're probably looking at one of the best places that you can store your wealth and look back in 5-10 years without even worrying about it and be like, man, damn, that was a good choice. And in the worst case scenario, like I said, like you're never guaranteed anything, but if you go down in silver or gold, like gold's probably got a little bit more potential right now since it's had a bigger run. But, you know, really, we could be seeing crazy numbers in these kind of things, so you can't always store it physically, so that's where, for me, like the Sprott ETFs, the Canadian Royal Canadian Mint Pack ones, those are the best ones. But anyway, cheers. Have a great day, okay? Bye-bye.